Traders, how are you? With Marcello. Today we're doing the recap of what happened in the markets last week. This week we have news that an elevated amount of elevation in the iPhone 12 might be killing you. So a lot of the countries in Europe decided to ban the sale of iPhone 12. The Fed in the United States decided to go ahead and stay the same when it comes on interest rates, and oil now is starting to spike, which means not very good news for inflation. Let's go ahead and get started. So the Fed, the central bank in the United States this week, which is the biggest news of the week, stated that they weren't going to raise the interest rates again this meeting. So it stayed the same, but they're going to indicate that another hike still might come on the horizon. This is good news because the cost of things aren't continuing to increase. And if you don't know how that works, basically, instead of allowing the market to decide the things that it should, in the not very capitalist country or society, I should say, that we live in anymore, there's a bunch of dudes, that old white dudes that sit in a chair and just decide what to do with the economy via the interest rates. So basically, if the interest rates go up, everything for you and I get more expensive. And the reason why is because we take a mortgage, which is a loan, which is based on the interest rate that we have to pay to live in a house. If you're paying rent, the owner of that house gets a mortgage. The car that you borrow money to be able to go ahead and buy, the credit card that everybody's putting the extra expenses on right now. And so in 2008, 2009, what happened was the governments of the world, because we almost had a absolute collapse financially, decided to drop the interest rates almost to zero, which are the lowest in recorded history, right? Not the history of the US, but the history of the world. And then that created a huge mega bubble in absolutely everything. Because before, if the interest rates were only, let's say, 5 or 6 or 7%, you wouldn't be able to afford as much of a house, or, maybe one house instead of 2 or 3. Well, after they dropped the interest rate so low, everybody can buy 3, 4, 5 houses. See how it works? Because the same amount of a house that costed more before, we're talking about 3, 4 years ago, is cheaper to buy at the lower interest rates than a house now that's worth more than it was 3, 4 years ago, but with an interest rate that's 2 times as high or maybe 3 times as high. See how that works? So it's incredibly important. And the way that ties into the economy is that almost 70% of the economy in the United States is based on consumer spending. So you and I going out and spending money is what almost 70% of the economy is based on. Most industrialized nations, which is basically the entire world outside of Africa, some countries in Asia, and maybe Paraguay and Bolivia and Latin America, the majority or a big chunk of the economy is literally consumer spending. So if the interest rates go up, you and I can't afford as much. And the more that they stay high for a longer period of time, it affects what you and I can buy over time. See how that works? So very good news, but due to the fact that there were some jobless claims that were lower than expected, there were 25,000 under the estimate jobless claims and 20,000 below the previous period. Jobless claims mean people that have lost their job, or that jobless claims, right? So if the number of jobless claims goes down, that means that the job market, the labor market, as the fancy economists say, is actually pretty tight, or let's say it's a good market. So what's going to happen? The Fed or the central bank are going to look at these numbers and say, oh, that economy is actually doing pretty good. So we have room to continue to increase the interest rates, which is a horrible thing for you and I because everything continues to get a lot more expensive. That is what happened this week in a nutshell. And I'll tell you about the iPhone killing you in just a second. That was clickbait, the title, by the way. So the markets overall this week in the US and Canada, mostly negative on the news with the interest rates. There's a potential shutdown as well when it comes to the government on September 30th, and the Republicans now in the House just did a recess, so there might not be a deal, which can affect the economy even more and cause more inflation. The European markets were mostly negative as well. Russia and Paris, looking at the numbers here, were the most negative. Latin America was mostly lower. the Merval in Argentina, the great socialist republic of Argentina, which has almost a 50% poverty rate, by the way, because they're socialist, is down over 2.5%. Middle East and Africa, mostly mixed. And then in the far, far east, Asia, Australia, that area, we have the Kospi and South Korea being the most negative of all. Bitcoin and cryptos, they came out with a report this week that said that 95% of the NFT market is now absolutely worthless. Remember what I told you guys about the crypto space and NFTs? Obviously, you can make money in any kind of market, right? Because if it's high risk, it's high reward. But just remember that whenever it's high risk, it's high risk as well. And one of the things I always think about, for example, is, well, you're trying to ride like these bubbles, right? The super increase in these prices on these pictures that you can just take a screenshot of that supposedly someone else owns. And you could be trading something like the S&P 500 futures, for example, where you have a 50-to-1 leverage. You can open up an account with micros with just $100, and you can learn how to make consistent profits over time, right? So you can make maybe 10 or 20% a month on that. Obviously, you can lose money too, right? So if you're not doing it right, you can lose all your money. So keep that in mind. But it's just, there's other, in my opinion, more secure ways to look for return on investment, and you're going to want to look for a side hustle based on the increase in prices of everything that's going up. But just keep that in mind. Bitcoin went down 0.4%, still in the consolidation phase. It's about 26,602 as of Saturday morning. Might be a little bit different when you guys watch the video. Commodities, oil surged to a 10-month high on Tuesday. This has to be with the voluntary reduction or the production cuts that the OPEC Plus is planning, the oil mafia, as I like to call them. Mostly Russia and Saudi Arabia, two of the top three producers in the world. They're deciding to go ahead and cut production voluntarily as well. So that's a really big problem because remember, all of our economies run on oil. Whenever you order a product or you buy food in the supermarket, that is transported with gas, with diesel, and a semi-truck. So if oil keeps going up, and the price to transport these products continue to go up, that means that the cost of things are going to continue to go higher. Should I drop the Five Guys example? No, we'll pass this week. Some of you guys have followed me for a while. Anyway, so continuing on commodities, Mexico is going to start its first liquefied natural gas plant. It's going to float in the ocean. The last pieces of that is being deported, being shipped from Texas. So their idea is to be able to go ahead and process the natural gas from the United States and also Mexico for export. Russia is banning diesel exports, and they're putting a temporary embargo on gas and diesel exports. So that's even more upwards pressure on oil and gas. And for the week, crude went down 0.82% for the WTI, which is in the United States. That went to $90.03, while Brent, which is the international version, went down to 93.27 and went down by 0.70%. Gold went up 0.03%, 1,923.80. Silver, which you guys know is my favorite market, went up over 2% to 23.62. We'll start seeing those continue to rise quite a bit after they start lowering the interest rates. And in financial and banking news, we have a economic debt tsunami that's coming toward us in the United States. The United States debt crossed 33 trillion for the first time on Monday. And it's a big problem because it's about 136% of GDP. And so the backstory on this, and let me know if you guys like it when I explain these things, because when I was younger, I always wanted somebody to explain this stuff to me. But I'm going to give you it from the beginning. In 1999, there was a tech bust, just let's call it a tech boom bust. So that caused a hedge fund, which was in the United States called Long-Term Capital Management, to fail. Since this hedge fund was kind of just entrenched with its tentacles all through the economy, they didn't let it fail. So what happened, there were a lot of banks that went ahead and saved this hedge fund in Europe and also the United States. So they didn't let the hedge fund fail. They literally just transferred the toxic debt over to the financial system. Then 10 years later, in 2008, 2009, we had the financial collapse. That, again, didn't let it fail. Now the governments came in and bailed out the financial system, right? And so now all those toxic debts continue to get bigger, and now they're on the government debt. So what's going to happen now the next time that we have an economic tsunami or financial explosion, let's say, now we're going to have a situation where the governments might fail rather than just the financial system. See how that works? And everybody thinks that it is impossible, but nobody thought that the Roman Empire was going to fall. Nobody thought that the UK Empire was going to fall. So prepare yourself because the end is near. Dun, 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 dun. So the reason why I explained that to you is because when we had the financial crisis of 2008 and 2009, all of the countries around the world dropped their interest rates to record lows, and they started taking out debt to be able to invest in the economy to get the economy moving again, right? And so whenever a country takes out $1 in debt to invest into an economy, you get a positive return on investment. So you take out $1, you put it in the economy, and you get more than $1 back. So it's a positive outcome. But when a country gets to 90% debt to GDP, you get less than $1 in return. So you have a diminishing amount of return where you need to take even more debt out to get the same return as before to continue growing more than before. And so it's just a debt spiral where you continue taking out more and more and more and more money. Then COVID hit. Obviously, right? We had this is why I always tell you, it's not about right or left or Republican or Democrat. They're both horrible. They're both driving the car off the cliff. It's just one drives faster than the other, right? And doesn't want you to use its certain pronouns. So do what you want to do. So the situation is that now that the interest rates are continuing to go up, and now that we have so much debt, it's going to be extremely hard for us to be able to service that debt now that the debt payments are approaching and have already surpassed $1 trillion a year. So I don't have the number memorized, but I believe the total debt with the total budget of the US economy is about 4.2 trillion. Don't quote me on that. With the extra debt, it's about 5 or 6 trillion. So now we have $1 trillion in interest payments. So it's literally about 20% of our budget is going to interest debt payments. So what happens? Now about 25% of all the debt that we took out over the last few years at the record low interest rates is coming due. It's starting to mature, which means that the US government is going to have to re-debt, right? They don't say that in the market, but I'm just explaining so you understand. They have to reissue that debt, but at an interest rate that's twice as high. So now we're starting to walk into this financial tsunami where we're not going to have enough money to even pay our interest on the debt, much that the debt itself. See how it works? Indonesia is the latest country to de-dollarize. They're creating a national task force to promote local currency transactions and also start to pay directly with their own currency. That's another big problem because the majority of the dollars that have been issued in the United States are actually outside of the United States. And now we have about 30% of the global GDP, which is the country from the BRICS nations, Brazil, Russia, India, China, South Africa, and more, starting to make cross-border payments with their own currency, which means that they don't use the dollar anymore, which is the customary thing to do before. So before, let's say if Brazil had to pay China, what they would do is Brazil would go out and buy dollars, then they would use the dollars to pay China, and China would receive the dollars, and then they would use those dollars to et cetera, et cetera, et cetera. Now, Brazil's just paying directly to China in the real, which is a Brazil currency, or the Chinese currency, which I forgot the name of, but you understand what I'm saying. So now that all those dollars are going to come back home, that's going to create an incredible amount of pressure on the US dollar, because remember that whenever there's an extra amount of something, the value goes down. It's just common supply and demand. When all those dollars come back home, the dollar is going to continue to go down, which means a lot more inflation. See how that works? Man, I got some bangers this week. Right? America's gross national debt. I told you guys about the debt. Japan August inflation rate came in at 3.2%, still above the DOJ target, the central bank in Japan. The US dollar rose to its highest level on March 9th after the Fed policy statement, and the central bank in Turkey, they rose their key interest rate to 30% from 25% to try to battle double-digit inflation. Both the Bank of England and the Swiss National Bank announced that they were going to increase the interest rate this week, but they might continue to increase it in the future. So we have more and more countries now that are stopping the increase in the interest rates, which in the long term is a good thing for you and I because they aren't continuing to get increasingly more expensive. And in political news, the CDC reported that of every one life the thing in your arm from the pandemic saves, about 100 to 200,000 damages from the I almost said it. From the things in your arm occur. So do what you will with that information, but now that they're starting to come back with the masks and everything else. Economic news, U.S. home construction dropped to its lowest level since June 2020. This is the problem with the declining housing affordability. I have properties in Florida and the insurance doubled from one year to the next. Not bueno. So that means that if a landlord doubles their insurance payment, that means that the rent is going to have to go up on people that are renting the houses. You see how that works? And everything starts to get a lot more expensive. I think what they should do in Florida is something like put an extra gas tax and then create a fund with that money and then invest like in the hedge funds do. So if you have $1 billion or let's say, $2-3 billion, $2 billion at 5% a year is 10% is 200 million. That would be $100 million a year. That would more than cover these huge damages from hurricanes. Oh, I'm going to send a letter to the governor. Japan's private sector activity expanded at its slowest pace in February. Remember that Japan is the fourth largest economy in the world. So if they're starting to slow down, it's going to affect the overall economy as a whole. And Turkish President Erdogan asked CEO Tesla Elon Musk to build a factory in Turkey. He was there with his kid, and Turkey is among the most important candidates for the next factory. And Tesla said that they produced their 5 millionth car or 5 millionth car. I don't know how you say that in English. Instacart, they went on their IPO. They debuted 12% out of the gates, started at $42, 40% above its offering price, but it did close 10% lower in the $28 to $30 range. And in technology, the iPhone 12, the electromagnetic wave emission in your iPhone 12 is dangerously high. I'm sure they don't want to report what the iPhone 15 has because we wouldn't want to take a little bit of profit out of Apple's pocket. But now France, now Spain, and Germany and Belgium are about to pull it from the market. I have one of these things on my phone. I'm not rich, so I don't have an iPhone, but it's like a eye radiation patch that you put here in the back. You can probably order from Amazon or eBay or whatever. Probably would help you when it comes to the radiation. But one of the things I think of too is that if cell phones were so dangerous, and we've been using cell phones now for decades, right? I think it was in the 80s that they came out, whenever they came out. Why doesn't everybody have brain tumors? See how that works? Right? Germany is likely to get over 50% of their energy from renewable sources this year. They need to ramp up to be able to get over 80% by 2030. Now, one of the things about these renewables is they're not accounting for some things that can happen. For example, there was a volcano called Krakatoa in Indonesia. I forget the year. I think it was in 1776 or 100, 150 years ago. You guys can look it up. The year without a summer on Google. But basically, this one volcano had so much plume in the air that it was snowing in New York in July. So they couldn't grow crops that year. So what's going to happen to the German electrical grid when there is no sun, for example, or no wind, if they don't have a backup power supply? Things to think about. That's the news for this week, guys. Let me know if you guys have any questions. Don't forget to subscribe. And remember, the preppers were right.